Okay, I just wanted to check out this video about a discussion in relation to the validity of a wealth tax. So the guest is Daniel Priestley, who appeared on Diaries of a CEO, which is a good series, so check that out. I'll also leave a link to this LBC episode so you can sort of check out, the whole thing for yourself. And he was having a debate with Gary Stevenson of Gary's Economics. And it was quite an interesting debate because obviously Gary is positioning himself as somebody who's very much for a tax on assets specifically. Whilst if Gary's the protagonist in terms of that story, then the antagonist is Daniel Priestley in terms of his view as to whether or not that's the right approach to deal with the challenges we're having with the economy and sort of wealth inequality, essentially. So let's dive into this and see what we can learn.
So if tax rises are coming and the pressure is on Labour to introduce a wealth tax, what do the millionaires think? This is your opportunity on LBC to meet the millionaire. Daniel Priestley is an entrepreneur, best-selling author and international speaker. Started with nothing and built successful multi-million-dollar businesses. Thank you very much indeed.
Yeah, so I do have a slightly different view around this starting from nothing trope. And it's something I think that should be considered in the context of a discussion of whether or not we should be considering a wealth tax or a tax on assets more specifically. Because if he means he didn't have any advantages, he's not a Nepo baby, then I would accept that, yes, he's probably come from nothing and we can take that at face value. However, when anybody goes into business or does anything in life, actually, they don't start from nowhere. They have parents, they go to schools which are either state subsidized or state funded, or their parents would have benefited from that. They benefit from living in a safe society. And there are factors that need to be in place to be conducive to people being able to meet their potential and establish successful businesses. And more specifically, when you start a business, typically it will be loss making if it follows the normal route. And there will be things like loss reliefs, which is obviously something the HMRC or tax authorities offer going. There'll be grants, there'll be allowances. So again, if you invest in assets, there'll be capital allowances, which can also be accelerated actually, which are good for cash purposes. And there's also tax advantaged investment as well. So we have an EIS scheme in the UK. And also you can attract talent using EMI option schemes where you agree a discounted valuation for your business for the purposes of determining an option price. So there's lots of things the state is doing, as well as creating an environment and infrastructure that is conducive to having a successful business, that if they weren't in place, it's highly unlikely that your business would be as successful as it is, or it'd be a lot harder. So this idea that people have come from nothing, I think that context is really, really important because broadly speaking, the state, as well as other people, have invested in you to help you get to where you are in life.
Coming into the studio, and welcome back to LBC.
Pleasure to be here.
Let's start with that question of where this tax rise, because Labour are going to have to put taxes up, where this tax rise is going to fall, and your, I guess, suggestion of why it shouldn't be you.
Well, I think we should.
So to be clear, I don't think Daniel Priestley's position is that it shouldn't be him. So I think the presenter was being a little bit naughty there. But I think we do need to clarify that. I don't think that's his issue.
As many taxes as we possibly can. The country needs to run on taxes, and we have to have public services and all of those sorts of things. The problem that we have at the moment is that we live in a very digital environment. The millionaires are making money online. 95% of the assets of publicly listed companies are digital assets now. So they're intangible, they're databases and they're algorithms and media content libraries and all of those sorts of things. These are businesses that can be run from anywhere. So,
okay, so what he's saying about the nature of business and the fact it's become more digital is true. But when he says a business can be run from anywhere, That's not because the businesses or the economy has become more digital. Businesses could always be run from anywhere, from a legal perspective. So broadly speaking, where you headquarter, and i.e. where management decisions are being made, that is broadly speaking where the business is deemed to be operating from. And that's why we had tax havens where business were headquartered, to take advantage of these lower or nil corporate tax rates. So the digitalization of business and the economy has not made businesses more mobile. They've always been mobile. So I don't quite agree with what he's suggesting here or what he's implying.
The issue is that many of the millionaires already have 2 passports, they already have multiple residences, they already spend much of their time globetrotting around the world, so they're very comfortable with the idea of having a home base somewhere else.
So I think the operative word here is already. So the context of this discussion is, we want to introduce or consider a wealth tax or a tax on assets. He's sort of alluding here to the challenge of around, well, okay, people can just leave. But if somebody is minded to leave a country because they want to lower their tax liabilities, they will just do so anyway, because there's always going to be a jurisdiction where taxes are next to nil or nothing. So even if the UK had a very low tax rate, the fact that it does tax will mean that there'll be another place to go where, if a tax rate of say 5% versus a tax rate of 0%, if the only reason you're moving around is because of tax, then you'll just go to the place where there's 0%. But ultimately, it's not the only thing that drives the decision making, which is why we don't see this happening. And I think often with people, when they push back on tax increases or tax reform, they overplay, in my view, the dominant effect on decision making when it comes to tax rates, because, as I say, there's other things that just have to be considered when deciding where you want to operate and where you want to live.
So if a country becomes unpopular or hostile to wealth, then unfortunately it's just not that hard to run the business from anywhere in the world.
Well, I guess the question is what we mean by hostile and actually what we mean by wealth. Because the suggestion that, and the lobbying of government that is going on, is to say for people with assets over 10 million, they should pay an extra 2%.
So there's a few issues with that, which is, how do you calculate it? Because if I raise...
So he says the first issue is calculating it. That isn't an issue, because valuations can be calculated for all sorts of reasons. So if you want to sell your business, it will be valued and there'll be a calculation. If you want to raise equity or financing or borrow against your business or any asset, it will be valued. And if, as to coming back to the sale point of view, or even inheritance tax, if you want to sort of pass on your business to a beneficiary, HMRC would agree a valuation. So doing a valuation isn't an issue. So I'm not sure why he thinks it's an issue. But let's hear what he has to say. But that's not an issue, doing a valuation.
Some money for a new venture, and we raise money at a 10 million valuation, do I now have a 10 million asset, or do we understand that that's just a fictitious valuation?
So again, I think I find this position quite disingenuous, because he's suggesting that because the valuation is subjective in nature, it's fictitious, right? It cannot be relied upon. And that is basically not true. If a valuation is done, then that is the value of the asset at that given point in time. Certainly if there's been a sale of shares, so there's actually a transaction, a commercial transaction we can actually refer to, then that is the value at that point in time. Now, he's right to say that, okay, the valuation changes, but a recent transaction or a recent valuation can be viewed as reasonable. It wouldn't be viewed as fictitious. And if he's trying to figure out, for example, how much he is worth on paper, if he wants to sell his business, he's not going to say, well, this is a fictitious number, but let's agree on it based on how much you want my business, right? That's not the position he's going to take if he's trying to sell his business. So I do find the choice of words here misleading and disingenuous, because he's kind of arguing that he's not as rich as he needs to, as he appears to be, for the purposes of determining how much tax would be due on this asset in question, i.e., the business.
In terms of it's not realized. The word wealth is a really clever word for the word unrealized gains.
So no, that's his definition of what wealth is. Wealth isn't defined by unrealized gains. What wealth is, in my view, is essentially it's a relative measure, right? So if you have more assets relative to someone else, you are wealthier than that person, right? And those assets will appreciate in value. And that's what he's talking about when he says there's an unrealized gain. But wealth isn't unrealized gains. Wealth is assets. So your assets, if they go up in value, you become wealthier, and there's an unrealized gain that's pushing that wealth up. But if your assets go down in value, because assets can depreciate in value, then you are less wealthy, relatively speaking. So it works both ways. So it's not problematic to say, well, we are going to consider the value of your assets as a measure of wealth, because that measure can go up or down. It just doesn't always go upwards. And therefore, there isn't always going to be this tax burden based on this unrealized gain in perpetuity, because it doesn't always go up. It also goes down. And if it goes down, in a sense, you're going to get a form of tax relief if this is the principle we're going to apply. So again, it's quite misleading, I think, and it's quite disingenuous, because it's positioning it as though the asset owner is hard done by.
I have properties that I bought years ago, and you revalue those properties at whatever you value them at. On paper, in theory, there's a particular level of wealth that has been accumulated. But if you don't sell those, if you haven't sold those assets, it's an unrealized gain.
So he's right that if you don't sell something, it's an unrealized gain, and the gain itself is theoretical, not fictitious, to clarify, but it is theoretical, and I do accept that. However, monetizing an asset does not always require selling it, and again, that's the point he's being quite silent on. It's something he would know. So you can borrow against assets and monetize it that way. You can lend assets yourself, actually. If you have an asset, you lend it to somebody else. You can monetize it that way. And also, as an asset appreciates, i.e., there's an unrealized theoretical gain, the borrowing terms improve. And a more sort of normal day-to-day, everyday example you can think of is any mortgage, remortgaging agreements you enter into. If the value of your home increases on paper and the bank accepts that new valuation, you basically end up in an improved, what we call LTV position, which is loan to value position. And normally, depending on what sort of banding you're in, you can actually agree a better or cheaper mortgage rate, because there's less risk to the bank if they have to force the sale of your business if you default on the mortgage repayments. So although you are not selling the asset, the fact that the asset has increased in value and the valuation is accepted because nobody else would be viewing it as fictitious, then you are in a better financial position and you have access to cheaper finance, which creates further opportunities financially for you. So I think, again, he's kind of deliberately not talking about these points because it doesn't suit his argument, because the argument's quite nuanced, it's quite complex, it's not as straightforward as some people on the left or right make it seem. But again, this idea that we should somehow view people with lots of assets as in this very disadvantaged situation for tax reasons, I think, again, to me is misleading. I don't personally accept that. I'd rather be in a position of having a lot more assets and dealing with whatever tax issues I've got to deal with to navigate that. And I think most people would be as well. And what you will notice, if you observe, is that many wealthy individuals, high net individuals, they will acquire a lot of assets, and there's a reason they're doing that. And it's not because it's a problem for them.
So ultimately, a lot of the wealth of a nation or wealth of the UK is the theoretical value of the companies. So, for example, you take a massive company like Tesla. If a small number of people on any given day buy some shares in Tesla, they extrapolate that tiny little purchase to the whole value of the company, but it doesn't mean that you could sell the whole company for that amount. So the wealth.
So he's correct when he says it can be a bit misleading to take the latest valuation, which is a small fraction of the company, and extrapolate it over the whole company. But my position would be it's also okay to do that, right? It just depends on the context of what's going on. Because if what he's saying is, okay, Elon Musk decides, right, he wants to sell all of his shares, to the market, to retail investors, then he's right in the sense that by doing so, he's not going to realize the same return, because what happens is it creates a lot of supply, and that pushes the price down, because obviously there's more supply than demand. However, if he was to sell the business to another investor, then he could realize the value that's been calculated by those latest transactions, or an even higher value based on a premium. So typically a business will be sold at a premium. And that was the issue he found himself in when he bought Twitter. He bought it at a premium, so over and above on paper what the actual shares were worth. So on that basis, you can actually realize the business and sell it on a whole. You can realize the value by selling the business in its entirety in that type of transaction. So it really just depends what is going on. But the reality is, if you assume the shares or the stocks are basically the same as every other share or stock, then there's nothing wrong with taking the last share price, multiplying it by the total amount of shares in circulation, and saying that is the value of the business. That is a very reasonable position to take, ignoring different classes of shares. Because as I say, if the shares are the same, then they all have the same price. That was the latest price. That's the value of the business at that point in time. So it's not fictitious, as he described before. It's not problematic, because that value could be realized depending on the nature of how you handle the sale. And it would be, in my view, an accurate reflection of what that business is worth at that point in time. It's as good as any other valuation I could think of.
Wealth is just a weird calculation that doesn't mean anything until you actually liquidate it. So
again, that's not true. It's not a weird calculation. These are all generally accepted and conventional calculations, and there's lots of ways of doing it, but they're all, very, very well understood. They're not weird, and it is a reasonable way of determining somebody's wealth, as I've just said already. And it's not the only. You don't have to sell an asset to benefit from the value of the asset, as I mentioned before. So based on how he views things, it makes sense why he's quite resistant to the idea of a tax on assets or a wealth tax, because basically his view is, well, there isn't a reliable way of doing this. It's very difficult to do so. And if it's something we do, there's a risk that basically people that can leave will leave. My own position is people that are minded to leave for tax reasons will have left or will be leaving, right? So they can be resident, anywhere in the world, and that's basically in relation to where you are from year to year, where you live. And if they're highly mobile, they can be wherever they want to be. Yeah, so I don't personally see a problem here, and I don't really accept his arguments here around the difficulty of determining the valuation, the challenge around people leaving, because as I say, the people that want to leave will leave, and also the idea that the valuation itself is fictitious.
Coming up with this idea that you have to pay 2% of an unrealized gain makes it incredibly unworkable. How are you?
So the 2% isn't on the unrealized gain. The 2% is on the asset value. And again, I think he's deliberately conflating the two things to make it seem as though it's unfair. Because if it's on the asset base, as I mentioned before, asset valuations in relative terms can go up or down. If it goes down, then the 2% charge goes down. If it goes up, then it goes up. So basically, you're taxed on the unrealized gain and you receive relief on the unrealized loss if HMRC accepts the valuations. So it works both ways, essentially. And again, I think that nuance is important to understand.
Going to do that with a fluctuating value that goes up and
Who
down?
decides the value of the house price or whatever it might be?
Well, or the company price on what given day? Like, what given day do you calculate it? Is that price deflated by the tax in itself? So there's all of these issues. How do you calculate it? Do the companies have to?
So you can calculate valuations however you want to calculate valuations. It's not, basically, when it comes to things like tax, ideally you want to keep it simple and you want to keep it consistent and you want to keep it fair. And it will be different. So I do accept his position about it's not straightforward, because for different industries and different sectors, you're going to have different methodologies of doing it. But ultimately, HMRC has methods of agreeing or calculating valuations for different reasons. So they can agree one for, again, if you operate an EMI option scheme. They can agree valuations for the purpose of council tax, for example, or stamp duties or business rates. Right? You can do all sorts of things. You can use revenue, multiples of revenue. You can use discounted cash flows. You can use net asset base. Like, you can use all sorts of things. So there's not, I guess my feeling around all of this is perfect shouldn't be the enemy of the good, right? And if the feeling is we want to consider a wealth tax, that's the first thing to agree. And if we don't agree on that, then every other debate is kind of irrelevant in terms of the valuation, for example. And my feeling is Dan Priestley does not, he does not agree with this view of a wealth tax. And I think he probably needs to be stronger on that position and try and make a more economic argument around it, or explain why it would be unfair, I guess. I think for me, that would be the thing that would sort of lean me towards his position. If he believes it's fundamentally unfair to people like himself, then he needs to do a better argument, give a better argument as to why that is. If he's just saying it's unworkable, it's impractical, I don't accept that position, because these processes exist. You can agree something, even if it's not perfect. And business valuations are things that are routinely done for all sorts of reasons. So when there's a need to sell your business, when there's a need to borrow, when there's a need to receive tax allowances or grants, you will find that there is no problem valuating a business for those reasons. So I don't see why considering it for for determining your tax base, let's say, I don't see why now that would be a problem.
Go into debt to pay it. And then once you start exploring those questions, you just simply come to the conclusion it's easier to take your company offshore.
So that's the conclusion he's drawing, right? So the first thing he said there was around, will the business have to go into debt to pay the tax? Because essentially what he's implying here is that because you haven't sold the asset, you can't pay the tax. And again, my feeling around this is that, well, if an asset is really an asset, there will be an identifiable income stream. And that is how, broadly speaking, assets are defined from an economic perspective. I mean, there may not be, but typically you can monetize an asset in some way, or you can sell them, right? Or even if you do go into debt, as he's describing, you can go into debt probably on favorable terms because the lendor, sorry, will accept that what you have is an asset which they can basically repossess in the event you default. So for me, the idea that a business will have to go into debt to deal with this, my feeling would be, well, if that's true, then is that a viable business? Because tax liabilities and requirements change all the time, and a business needs to be agile to that. It needs to be adaptable to it. And if the answer for that business is say, okay, well, we can't cope with this, let's relocate, then I think from my perspective, that's fine. A business can do that for any reason, right? Businesses will manage expenses generally as a way of managing profitability, and tax is just one of those things. And another example I'd give, I guess, is payroll. If it's cheaper for them to operate a different model where they employ people overseas, or they outsource a lot of their operations, then that's actually what they're going to do. So businesses make these kind of decisions for all sorts of reasons, just to keep costs down. And tax is just one string in that, conundrum, I would say. So for me, I just don't feel as though tax would be such a dominant factor. It can be, but I don't think it really is as much as he's suggesting it is.
So, if the reality is that the state is going to have more money to pay for the things that the state needs to pay for, and it is going to have to come from somewhere, you say not you, I as a non-millionaire say not me, and my listeners who are taxed to high heaven say not them. Where's it going to come from?
Well, just first of all,
we're being sort of tax NIMBYs.
Yeah, just first of all, the UK government now spends 45% of GDP through the government. Now, that's a historical massive high point since World War II. So if you want to know where all the money is in a massive government that we haven't seen the size of this government since World War II, 45%.
Yeah, so it's interesting that he's saying, because what he's saying here is that basically government's become too big, and it's inefficient. And he's comparing the benchmark to World War II, which I find strange, because I wouldn't say the economy or the needs of the nation are the same. What I would accept that it's probably accepted that government is larger than it needs to be, and is inefficient specifically. But the size of the government as a proportion of GDP is arbitrary. Like, it doesn't mean anything in itself, right? So the fact that he's saying it's 45%, as opposed to let's imagine it was like, say, 20% in the past. What does that really mean? Does that just mean we had a smaller government? Does it mean we had a larger output in terms of GDP, a larger economy? Does it mean both? Like, unless we understand how those two things are interacting, that percentage on its own doesn't mean anything. It just means that, oh, it's bigger than it was before. I'm just going to conclude that it's because government is too big, as opposed to maybe government was too small before, right? We don't really actually know what that statistic or that metric really means. Also, what he's implying is all of this is government spend, right? So he's saying we've got this massive government, and that is why there's a large need for tax, because we're paying for this massive government. And in my mind, it's like, well, that kind of makes sense, but the government is paying for things. It's paying for infrastructure. It's paying for investment, much of which goes to businesses like his. It's paying for consultants, and then it's paying for a civil servant workforce. So the government doesn't have this money. So if what he means it's too big, and therefore he's talking about the government workforce as in civil servants, then what he's suggesting is that there needs to be cuts, or you keep that level of workforce or services, but you just somehow do it more cheaply, right? And I don't think that's actually possible. But then what's also being ignored, I think, is the borrowing aspect. Like, and coming back to what the presenter was saying, the fact that the government doesn't actually have sufficient tax receipts to deliver on the things it needs to deliver on, and therefore it's borrowing a lot more. So if a lot of this money is going to borrowing, then why is the government finding itself where it's in a deficit? And one can only think back to the wealth transfer that happened during COVID, and one can only think about what happened with the bailouts during the subprime mortgage crisis, um, and where ultimately a lot of this government spending is actually going outside of the civil servants I mentioned. A lot of it is going to private organizations, private businesses, to do a lot of projects on behalf of the government. So again, a lot of this nuance and context is deliberately missing, and he's just presenting it in a very simplistic way of saying, okay, well, the government is just way too big. It's just this big behemoth of an entity. I just want to arbitrarily cut it down, whilst at the same time do it, not accept that ultimately that's going to impact, benefits. It's going to impact what we can pay our teachers, our police officers, etc., etc. It's like I don't know how you can have the same but with less money, and I don't know how you can deal with the debt with less money.
Of the economy, almost half the economy, is government spending now. A few years ago, the government spent 650 to 700 billion a year. Now we spend 1.3 trillion a year. So have things gotten twice as good? They doubled their budget. Have they gotten twice as good at spending money? Or perhaps, I mean, God, unthinkable, but maybe the government needs to be better at spending money. Maybe they need to go.
Yeah, so again, he's right when he says the government needs to be better, but I think that would have been true at all times, right? So again, he's using the historic, he's talking about World War II. Again, like somehow that was the holy grail of government. Maybe it was, maybe it wasn't, right? But we can't necessarily conclude the government was any more efficient back then. We can only conclude it was smaller, potentially. So I'm not sure, again, why he keeps benchmarking the current position against that position. But again, coming back to what I've said before, um, why is debt not part of what he's considering here when he gives this explanation, right? He makes it sound as though all government spending goes to day-to-day spending, um, and none of it is dealing with borrowing, for example. None of it is dealing with investment. None of it is dealing with specifically foregoing tax to help smaller startups, for example. So for me, part of this discussion around government spending has to consider the level of borrowing. And it also has to consider the fact that the government is broke. So right now, the government's in a hole. That needs to be fixed. That to me is the bigger problem. And part of fixing it is as he says, Daniel Priestley, okay, we need to look at efficiency. We need to make sure that for every pound we're getting the biggest bang for our buck, right? So I do accept what he says, but I think I don't accept how he positions it. And I think it's missing a lot of the context around what the government is actually dealing with. This is not discretionary spend. This is not stuff that the government can choose to turn on and off necessarily, without creating bigger societal problems.
Go from 1.3 trillion to 1.1 trillion.
Well, that's cuts, isn't it? That's cuts in government spending. So where's that going to fall? NHS?
Well, I don't know.
Pensions,
we just spent
schools.
20 billion giving away some islands. We just spent 20 billion on some solar panels made in China while we're also simultaneously dimming the sun. Like there are plenty of things the government does that are just plain stupid. 11% of working age people are getting disability benefits now because they're too sick to work. Historically, that was 2% of the population was too sick to work. Even after World War II, 2% of people couldn't work were too sick to work. We now have 11% of working age people too sick to work. So maybe we need to look at, do we give BMWs to people who have mobility issues? Because at the moment we give people a new BMW if they say the right thing over the phone.
So again, I think he needs to pull receipts on that. And I think also, again, he keeps doing this. He keeps comparing the current economy to post-World War II economy. And again, if you don't adjust for things like inflation, just different demographics, different population even, I'm not sure why that's a good comparison, other than to just illustrate the point that at one point in time the number was smaller and now the number is bigger, and then concluding that, well, the only reason it's bigger is because the government is less efficient than it was before. And I don't think I would necessarily conclude that, i.e. what I would say is that the government is equally inefficient, would be my starting point until I see evidence to the contrary. So it is possible the government is less efficient than it was. I suspect it is, but I wouldn't necessarily draw that conclusion without the receipts, as I say. So again, I just find that position strange. And then when he talks about the number of people on disabilities, for example, or not able to work or receiving these benefits, again, it's the same argument I'd make. Are we comparing like for like? So how would we assess the ability to work back then versus the ability to work now? And also, if let's say we are more lax now and we are more generous now, and I'd probably accept that we are, then again, it kind of is what it is, right? It's just a case of, well, maybe we've got the balance right now, and the balance wasn't right before. But I do agree with him when he says, well, we need to not be overly generous as a sentiment, right? I do accept that. But when he says they're receiving brand new BMWs, like, I've not seen personally any evidence of this. And also, even if they are provided with vehicles, do they own those vehicles, or are they provided to them? They have access to the vehicles, and then those vehicles are returned at some point in the future, as and when they're not needed, right? Because again, if they don't own the vehicles, they're not receiving the vehicles. They're just receiving access to the vehicles, which is still a cost. And arguably, yes, you would use used ones as opposed to brand new ones, I suppose. But again, I'm not convinced that people are receiving brand new BMWs because they are, have a disability or mobility issues. I don't buy into that personally.
That's a
Imagine being able to build anything, for any reason, in any style.
These are real things, by the way.
It is a real thing, but it's a glib description of what is at times a quite difficult set of circumstances for people to navigate to get the mobility support through PIP. And
I'm not saying you don't give support. I'm just saying when a country is flat growth, when the government is 45% of the UK economy, when the government has gone from 700 billion spending to 1.3 trillion spending, maybe there are some creative solutions. I mean, if I had a business that was flat, I wouldn't be giving everyone brand new BMWs. Maybe I'd be looking at secondhand BMWs.
So he's right when he says when things are difficult, you've got to look at your costs. You've got to reduce those costs. You've got to batten down the hatches, right? And he's using benefits and the welfare state as the analogy here to say, okay, well, in a business, my overheads I'd be reducing in times of struggle. And i.e. the welfare state essentially is the nation's overhead. Now, although I would accept that, I don't fully accept his answer. And the reason I say that is because he seems to be quite silent on basically the top line revenue. So if he was in a situation, and I'm sure he has been in a situation, where he's running a business and it's going through a period of difficulty, there'll be two angles of attack. One would be the things he's mentioned, reducing costs. The other would be to see how they could improve their top line, their revenue, Are there grants they can obtain? Is there loss relief or any relief they can obtain? And can they accelerate it? So you wouldn't just take the approach of hibernating and doing nothing and reducing your costs. You should also would look for any opportunities from a revenue perspective or an income perspective as well. And to use that analogy with respect to tax, that is what governments also need to do. So yes, they need to look at the state, the welfare state in this country and say, okay, is it too generous? Are there things we just cannot afford to do anymore? And I think Daniel Priestley is right to challenge them on that. And we should be holding governments accountable on that basis. But also what government should be doing is saying, okay, well, the way we collect tax, there may be an opportunity here to do something fairer. And I think that's ultimately what people want to see. And in a situation where things are tough, and the most wealthiest individuals are paying marginal rates of almost nothing, because most of their wealth is tied up in assets, relative to working individuals that are paying between 20 and 45%, at least. That doesn't seem reasonable either in a situation where the economy is flatlining and things are tough, and there needs to be that injection from the government of investment to get things going. Because ultimately, where is the government going to get the money to invest and to deal with debt and put the country in a surplus position? It has to come from tax receipts. And what is not sustainable is constantly looking at the PAYE system, and basically taking tax from income, because ultimately what's happening as a result of this is that people are not able to basically live to a reasonable standard of living as a result of this. Work is no longer paying in that regard, and it's only going to get worse if the tax burden on paid work, salaried work, continues.
03456060973 is the number. Daniel is here until 5 to take some questions and calls on this issue. Jason's in Maida Vale to kick us off. Jason.
Hello there, thanks. Hi, Daniel. Just wanted to ask you sort of touched on this just now, but everything seems to be in spiral, and everyone who is not a millionaire is paying a lot of tax. Where do you expect the money to come from? You just hinted that you think governments need to be smarter at spending their money. But is it really that simple?
There's two things that I think need to happen. Number one is government needs to make cuts. They are too big, they're too inefficient. Number two...
So it's interesting that, again, I am repeating myself here. His position is the main reason we're in a situation we're in is because government is too big, right? So if you reduce the size of government, does that mean you're going to earn more? Does that mean the cost of living is going to decrease, right? So what is the link between the size of government and the things that impact social mobility, for example, that impacts your ability to build wealth or keep wealth, right? I'm not sure the size of government, I don't personally see the link between the two. And maybe I'm missing something huge here, right? And that's obviously, I'm only human, right? But he keeps talking about the size of government, like that is the silver bullet. And I just find it interesting that seems to be always his. It's almost like his comfort blanket. It's like that's the place he always goes to. Government is too big. And I guess the reason he can always go there is because most people would probably accept that it is big, right? It probably is too big. But if you reduce the size of government, does that improve our ability to pay down debt, the nation's debt, for example? I don't know. I think either way, you're whether the government's big or small, you kind of need more tax receipts, would be my view at the moment.
We need to get the UK growing again. The UK is not growing. We are going through a digital revolution right now where the rest of the world has discovered that the entire global economy needs to transform around new technology like AI. We are going through a global boom in innovation where China, USA, they're discovering that these new tools and technologies can attract investment, they can create jobs. They can create growth. The UK literally has one of the leading educational infrastructures for AI. We have some of the best universities. We have some of the best infrastructure in London. We have an amazing time zone. We have a city that people love living in. We could have special economic zones that would attract people back here. The biggest issue that we have right now, I've got all of these entrepreneurial friends of mine who are the types of people making $500,000 to $1 million a year profit from their business, and they just pick up and they go to Dubai.
So he said a lot of things there, and I'll try and pick up on some of these things. So what he's talked about in terms of the UK and what makes it attractive are things that I think do need to be considered, but not in the way he's positioning them. So again, what he was previously alluding to was that if taxes become aggressive, as in his mind, as how he puts it, and become hostile, people are going to leave. But that could be true, right? And let's assume that's true, right? Because it's a reasonable position. You know, there is logic behind that thinking. But as I mentioned before, it overplays the impact of tax in decision making and understates and underplays everything else he's literally just described. So when we think about where you want to do business, where you want to live, you know, one of the things we think about, certainly in finance, is something called pestle factors. So this is the political environment, the economic conditions, societal environmental conditions, the culture of the place, I guess, technological conditions, the environment itself, the natural environment, and favorable, I guess, legislation, business-friendly legislation. So tax is a part of all of that, but it's not the only thing you can consider, which he just literally just acknowledged, right? So as I say, if tax becomes higher, then it starts becoming more important, and he's right in that regard. But it's not the only thing that you would consider. Certainly, if you need a highly skilled workforce, for example, certainly if you need to feel like any assets you generate or build are actually going to be safe and not sort of stolen from you or burglarized. You know, you're not going to be kidnapped. You know, because in other jurisdictions, you know, these are things you need to think about. So, you know, or just feeling like you're free to express yourself as you wish, right? You know, if you come from a Western culture, if you come from a Western society, where do you want to raise your family? Where do you want them to be? So it's not just tax you're going to think about. And ultimately, if you're very, very rich, it's definitely not something that's going to be the biggest thing. It's just going to be about, well, I am in a position where I am privileged enough to just do what I want to do, live where I want to live. And wherever I'm living, I'm going to employ people, if tax is a big problem, to minimize my tax as much as possible by taking advantage of the domicile rules. So in the UK, we have non-dom rules, which you can take advantage of if it applies to you. If the UK is not your deemed permanent residence or permanent home, or there's there's residential rules. You know, so again, if you're not resident in the UK, and you're living in another country where there's the double tax relief treaties, for example, you can take advantage of those. So there's always ways around this if you are wealthy enough to mitigate tax whilst living wherever it is you want to live. So again, I just find a lot of what he says strange, because it doesn't, to me, ring true.
Every single time, let's say someone who's making $1 million a year picks up and goes to Dubai or goes to the USA or goes to Singapore, every time they leave, this country loses about £450,000 worth of tax. You're going to need, I mean, theoretically, you only need.
Daniel, sorry, but why are they leaving? But why are they leaving?
The tax burden.
So that is true, right? So if you get people that pay a lot of tax leaving, then it is to the detriment to the government and the country, certainly from a tax receipts perspective, because they are paying the majority of tax in absolute terms. But that is by design. If you have a progressive tax system, the question is that burden too heavy? I guess is the question, and that again is almost a slightly different debate. But the people he's describing, I would say, are generally people that are paid through the PAYE system. right? It's salaried individuals that earn a lot of money and or may receive income in other forms. So, for example, if they've had a massive payout for closing a deal, that will go through PAYE. It will be payrolled. Um, so there will be a tax that they have to deal with. Certainly if they have options that are vesting and there's a large amount of options or restricted stock units, for example. So if you're paid in equity, so you're a member of the exec, you're still a salaried individual. You get director's remuneration, but it goes through the payroll like every other thing. So these are the individuals that arguably are are going to leave if the tax burden gets very, very high. And actually, these are the people I'm personally would be concerned around, because that is where I do accept the argument that there could be this exodus that is quite problematic for the UK, because the UK's tax receipts heavily rely on the PAYE system, right? And I think there is a real risk here. And that's why I say continually raising tax on income is not sustainable, because that is, in my view, is what's going to happen. But the idea that this is going to drive an exodus of people like himself, or billionaires, let's say, I don't fully buy, because as he mentioned before, they already have multiple passports. They already have arrangements in place to live wherever it is they want to live, because they can, right? And if they're going to leave, they would have already left. Like I don't see a real issue there, actually. And I think the final point around all of this, I suppose, in terms of this particular comment, is that the location of individuals isn't really a problem if you are taxing assets, right? There is a problem in figuring out where which jurisdiction it should receive the tax. But ultimately, if you're taxing the asset, we know where the asset is, right? We know where it's headquartered if it's a business. We know where it's located. And even if it's an intangible asset, we know which business it's registered to. And certainly if you think about the possibilities with blockchain, that makes things even easier, right? I suppose in some ways, and worst case scenario, you know where the servers are. So there's always going to be a location, in relation to this. If you tie it to revenue, you know where the consumers are coming from, where reported revenues are coming from. So and you know who the beneficiary owners are, right? The only challenge you have is, okay, well, if it's a global company or the asset location is ambiguous, what proportion goes to, say, the US, what proportion goes to the UK, or whatever it is, right? That's to me is the only challenge, I would say. But even that, I would say that there's workarounds, and how you apportion any tax you're calculating.
Burden is so high. 1% of people are paying 30% of taxes. 10% of people are paying 60% of taxes.
Okay, but they're making.
And I hate that argument as well, because again, just saying 10% of taxes is paid by 0.01%, if that's what he said, and the other 40% is paid by the next 10% or whatever. As I mentioned before, that is by design. If you have a progressive tax system, the idea is that the more you earn, the more tax you pay. Now, it is subjective to say, is that fair? And one could argue, well, I disagree with that, it's unfair. And one could argue, well, it is the best way. It's not the perfect way, but it's probably the less bad way, let's say. So I can see an argument to say, well, should that be the case? But it doesn't address the issue around taxing income as opposed to taxing wealth or taxing assets, right? And he's deliberately conflating those two things, because those statistics relate to tax on income. It doesn't relate to tax on assets, because that's not happening. So one way you could address this actually is by taxing other forms of wealth, because again, I don't necessarily view income as wealth. And then you're in a position actually where you can lower that burden, that income tax burden, on those individuals that are making up the 40% of tax receipts, or even the 10% of tax receipts. So for me, again, I just feel like it's a misleading statistic, because it's intended that's the case, first of all, if you want a progressive tax system. So if you don't want one, then it is problematic. And actually, it just indicates to me the difference in wealth, right? It indicates that inequality, that economic inequality, that wealth inequality, that's actually what this is a symptom of. And you have to think of other ways of addressing that.
Hundreds of millions of pounds in revenue.
I hate to say it, but people just look out for. The truth is that people are people, and they look out for their best interests. So
I think that's the truest thing he's said. And I don't have a problem with what he's saying in that regard. Like, I think people are self-interested, would be my view, generally speaking. And I would go as far to say, well, the tax system should reflect that. So it shouldn't treat some demographics in a more preferential way, on the basis that they are the people that are creating jobs, or are generating the wealth, or are growing the economy. Because basically, by reducing the tax burden or creating tax loopholes, to incentivize these individuals to set up their businesses here, basically relies on them making the decision to employ people where they are headquartered, and ensuring that those individuals also pay taxes that are due, and that they themselves, when they draw an income from that business, will pay any taxes that are due. And it's not a given that a business is going to do that, even if you give them what they want in terms of a tax favorable business environment, because they don't have to, and they're not obliged to. What they're obliged to do is work for their shareholders, and what their shareholders want is a return. And typically that's tied to profitability, which obviously ties back to the business valuation. So if it's cheaper for them, for example, to come to the UK because it has a favorable tax rate, let's say, but to outsource their payroll somewhere else, or to engage overseas workers, for example, or have B2P arrangements or just have contractors, there's going to be a strong pressure from the investors to do that thing, even though they're headquartered in the UK. And with a lot of these companies, a lot of the top execs, they are often of the country where they're from. So if you think about Facebook, for example, many of the top people that may be located in Dublin, a lot of them are going to come over from America and been relocated. So again, I wouldn't trust businesses personally, to honor the social contract, the implicit social contract, to basically grow the local economy where they're headquartered. If the view is, as Daniel Priestley says, is that people are, broadly speaking, and companies by extension are, broadly speaking, self-interested.
If you're an entrepreneur,
I made 50 grand in revenue. I'm not picking up and leaving.
well, plenty of people are who are making 50 grand are leaving. There are teachers who are going to Dubai. Yeah. There are plumbers who are going to Dubai. There are dentists who are going to Dubai.
And he's right. And these are the people I personally care about, because these are the people that are paying the 45%, the 30% of tax, right? When they go, that's what's going to hit the government a lot harder, because when they go, they're not coming back, right? They're not in a position to just keep relocating every 5 minutes, right? They're not that mobile. So once they're gone, they are gone, and they are not coming back. And what's going to happen is you're going to have to rely on more immigration to address these skills gaps, right? And I don't necessarily have an issue with that personally, but what I'm trying to explain is that is what's going to happen. So when we talk about immigration being too much, for example, that's something that the government seems to think, and people generally take that view, then you have to ask yourself, well, where does this play into that, right? If you are making things difficult, in terms of generating and progressing in life economically, especially I think young people, they're going to think to themselves, well, maybe I should ply my trade elsewhere, at least for a temporary amount of time, overseas, and just do something else, or do something else, right? And I think for me, that's the sad thing about the situation. You know, that's implicitly what's being suggested here. It's like, okay, well, if you work in the civil service in the public sector, stop, move to the private sector if you can, where you can benefit from some of the things we're talking about in terms of lowering your tax burden, or receiving higher pay, or better still, agree that job but work remotely. Coming back to his point about things being more digital, right? Because for me, that's actually been the big shift. The shift is in individual worker mobility, not businesses, because businesses have always been mobile by virtue of the fact they can headquarter wherever they want to.
There are actually plenty of people on 50 grand a year who like to pick up and go somewhere else at the moment because they do keep more of their money. I'm not saying that it's the right thing to do, but I'm saying people, one of the most sure factors in any economy, as predictable as gravity, is that people make the decisions based on the best interests of their own family before they think about the country.
And I think that's an important point, and I do agree with him. But it works both ways, right? If we accept that people act out of self-interest, then I don't think the country in question should treat a certain demographic more favorably than other demographics when it comes to how taxes are applied. Because if everybody is self-interested, then there isn't a benevolent section of society that are going to do the right thing. And again, that's not an issue in my view. Actually, that's not a problematic thing. For me, it's a relatively neutral decision, right? I don't think people are out there trying to cause harm, but they're not necessarily out there trying to save the world either. So that's perfectly fine. But to me, that just cries out that actually the playground, the economic playground, should be fair. And part of making a fair economic playground is having a fairer, in my view, tax system.
Jason.
Yeah, I think what you're saying actually hits the nail on the head. The problem is I mean, you're making it sound like it's people's concern about their family. I think it's greed. Someone doesn't like earning £8 when they were earning £10 last year, and when it's 800 million from a billion, I don't think that's a sum that you're allowed to whine about.
I disagree with the caller there. I think you can whine about that if you're in a position where you're earning a million, let's say, and instead you're earning 800,000 or whatever, even if it's a billion, and then you're suddenly earning 800,000 the following year. I think you can complain about that. I think everybody has the right to complain. I think everybody, coming back to Daniel Priest's point about everyone being self-interested, I wouldn't say the wealthy are greedier than anybody else. They're just in a position where they can take advantage, so to speak, of the situation they find themselves in a number of different ways, including how much tax they pay. But it's up to the government to do things around that, I would say. So as I said, I don't accept that position from the caller. I think the sentiment, I suppose, is that he's challenging Daniel Priestley's position around the fact that, because the way Daniel Priestley positions it is though, the very wealthy are generally net contributors, right? And it depends how you view that from a tax perspective, and deliberately sort of missing the point around, well, yes, they are net contributors, but ultimately they are benefiting more than what they're contributing, just by virtue of the fact that they're growing their wealth base disproportionately at a rate that's disproportionate to the rest of society, because they're able to pay a lower rate of tax. And that is, and what the caller is saying is that ultimately what is driving that is greed, which I wouldn't disagree with. But I don't think that they are greedier than everybody else. I just think greed is, I think they're as greedy as you or I, would be my position.
I don't think
We're
anyone's
not talking
whining.
about a
People,
teacher.
yeah,
We're not talking about a teacher that's earning 10k less. We're talking about someone who's earning, 200 million less.
and you get teachers who are also going to these places to pay less
Sure.
to have a better lifestyle, right? So that happens.
Sure.
But when you talk about entrepreneurs mostly are focused on opportunity. And if a country goes flat and if a country goes into decline, then the opportunity dries up and the entrepreneur ecosystem dries up. And then it's like a magnet for the entrepreneurs to go wherever the capital is, to go wherever the growth is, to go wherever the talent is, the tools, the technologies, the people. So entrepreneurs are like a little flock of birds, and they want to flock around all the other entrepreneurs. So do you know, when I arrived here in 2005-6, London was the place. That was the place to be. Everyone was coming from all over the world to be in London, and that was the place for entrepreneurs to arrive. We want to get back to that. We want to get back to the UK being centre of the world for entrepreneurs.
Yeah, so it's interesting that he wants the UK to be the centre of entrepreneurship, because he doesn't sound like he hails from the UK, but that's not, I guess it is what it is, I suppose. But again, it just goes back to what we were talking about with respect to why you would want to do business in one place as opposed to another. Because I do agree with him when he talks about entrepreneurs flocking to where the action is and where other entrepreneurs are. There is an element of FOMO in terms of the way they behave. There's obviously networking, and obviously that's easier to do when you are together face to face, which is obviously why there is competition for businesses, as we're seeing sort of in the the Emirates region, Abu Dhabi and those kind of places. So that is true, and you do as a country want to incentivize it. But as I mentioned before, and as he's just acknowledged now, tax isn't the only consideration, and it's not the only carrot you present as a country. Personal freedoms will be one. Security. So again, if you're putting money in an institution, the government's not going to seize or freeze those assets or repatriate those assets. Safety, so again, just making sure you can walk around and drive your car and do whatever it is you want to do. And there's a police force, highly educated workforce there. So again, good educational institutions and good infrastructure, just being able to get around, things work, etc., etc. So again, these are all things that play into the minds of people in terms of where they want to live and where they want to do business. And yes, tax is an important thing, but it's not the only thing.
Jason, I really appreciate the call. Thank you very much indeed. 03456060973 is the number. Am I right in suggesting that the apparent exodus of millionaires, which I do query a bit, there's a suggestion here that the millionaire exodus is equivalent to losing more than 500,000 average taxpayers?
It's worse than that, because if a millionaire leaves, that millionaire, let's say they're paying 500,000 a year in taxes. Theoretically, yes, you could have 50 people paying 10 grand a year to make up for that. But the truth is that 50 people have 50 NHS requirements, and they have the need for more services. A millionaire creates a lot of surplus tax, right? Because the government currently spends about £18,000 per man, woman and child in the country. £18,000. So you take a family of 4, right? You've got close to £80,000 that the government is spending on their behalf. Mm-hmm. Now, very few households generate £18,000 worth of tax per person. They might do it for one person, but very few households are doing it for mum, dad, and all the kids. Only a very, very small group of people create a surplus of tax revenue. When that surplus leaves, there is no amount of middle-income people who can create the surplus.
So that's true, and I don't disagree with him here, in the sense that tax receipts from high net worth individuals basically do contribute towards generating a surplus. That's I think that's fairly easy to understand. And if those individuals leave, it means overall you do have less tax receipts. But that is if you continue to tax income, and that's if you continue with the current tax regime, right? The current tax structure. So if you do something different, i.e. tax assets, then in some ways it doesn't matter if the individual chooses to leave, because the assets are wherever the assets are. And if you think about an asset in terms of, okay, a UK house where, again, people may choose to shelter money, for example, where they are very, very high net worth individuals. You think about land. So again, a lot of land is being bought by, you know, institutions, for example. Can that land be moved elsewhere? If you think about any global business, how much, you know, are they allowed to participate, you know, enter the UK market and receive income from UK customers? If they are, then a lot of that asset's value is attributable to the UK. So whether people leave or they don't leave, if you are taxing an asset, it's less problematic. It's problematic if you're taxing income because it's easier to say, well, I'm not earning the income in the UK. It's not sourced in the UK, it's sourced elsewhere. So everything he's saying relies on the fact that there is no tax reform and there is no wealth tax or any other kind of tax that doesn't consider necessarily income. It considers tax on some other way of assessing wealth. So I think that's something to just bear in mind here, ultimately.
Sam's in Enfield. To get back to your calls. Hi, Sam.
Hi, Tom. So this question is a rhetorical one because I believe I know the answer. So I think that what we need is a temporary reduction in capital gains tax for a short, defined period of time to allow people to actually, actually sell their assets and make that gain. And
So I disagree with this caller, just as a matter of principle. I don't like arbitrary transfers of wealth because typically it just gives that particular demographic an advantage over every other demographic, right? So an example I can think of is like the stamp duty holiday that was introduced to stimulate the housing market in the UK. Now, for many people, if they just happened to be looking for a house and find a house and agree a sale within this window, then it would have worked out. But it was just kind of a weird lottery for most people in terms of the timing of you know looking to buy a house. But it's very difficult, you know, if you're not somebody that's very wealthy to react to that, right? You kind of need to know it's happening already. But if you're somebody that has a lot of assets, a lot of cash, you're very rich, then it presents an opportunity to get a house at a discounted price, which you could then rent out, for example. So often these kind of holidays, when it comes to taxes, tend to benefit people that don't really actually need the assistance. It just helps them basically get an even greater advantage and become even wealthier in the longer term. Or it advantages people with inside knowledge, I should say, who are connected to legislative, you know, people that are sort of creating the legislation. So for me, that's why I don't like these sort of suggestions around, okay, let's temporarily do something. Either you do it and you do it on a long-term or permanent basis, or you just don't do it.
I believe that if the government did that, they would actually raise a huge amount of money, which is locked up in these assets. I also think they should do the same thing on things like VAT and corporation tax, but just for short periods of time, which is what they do in the United States between state and state. And it actually generates a lot of revenue.
So what
does your panelist think?
Go for it.
Well, there's one argument, which is that in this country, 9.4 million homes are big family homes with less than 2 people living there. So there are 9.4 million homes that have 2 spare bedrooms or more. And what is that typically? It's a baby boomer couple who paid off their home. They have no mortgage. The kids come home for Christmas. But other than that, 11 months of the year, it's a couple living in a 4-bedroom home. And if you ask baby boomers, like I have, why don't you sell the house and downsize? They say, well, I don't want to pay stamp duty when I buy another one and all of that sort of stuff. So what this person is saying is correct, that people do make different decisions based on taxes. And not just millionaires, all people make decisions based on taxes. People respond to incentives. So
I do agree with what he's saying here about stamp duty and the fact that it can basically put off, you know, or sort of disincentivize housing transactions, let's say. but it isn't necessarily the only consideration, coming back to my previous points about how much tax is overplayed in some regards. Because I appreciate this debate is around tax, so that's where the focus is. But it's not the only thing that will determine what someone actually does, and it's very difficult to predict what people are going to do. And what I mean by this is that it is right to say, okay, if you increase tax, there is an increased risk of people leaving the country and businesses not headquartering here, for example. But it's not a definitive statement. And I think until you actually do it, then you don't really actually know what's going to happen. And coming back to what he's talking about in terms of these big houses where people want to potentially downsize, one has to consider, can people sell their house at the price they want to? So it's not just the stamp duty, but it's actually, are their houses affordable anymore? Because when you think about salary inflation relative to house price inflation, house price inflation has completely run away from salary inflation. So there's less and less people that can actually afford these big houses. So there is actually, in that sort of type of house, that there is a potential sort of oversupply relative to demand issue. And you find yourself in a situation where, broadly speaking, the only individuals that can actually buy, a house like this are developers, or, as I say, very high net worth individuals who are looking to invest their money. And typically, because it's a less saturated market in that regard, they're in a stronger negotiating position. So in many ways, it might be better for the owner of the big house to actually release equity or borrow against the property rather than actually selling it, or look to get a tenant in to generate some income if they're unminded to do that. So it's not just stamp duty that dictates things. There's other factors to consider. So that's why it's very difficult to predict, oh, if you do this one thing, if you tweak this one variable, this is definitely going to happen, and this again is the root cause of everything, because it's not always the case.
We have 9.4 million big family homes in this country that are being underutilized because people don't want to pay the taxes on moving to a different house. So, that is a consideration.
I also, Sam, I know that your question was rhetorical, so I'm guessing that you think that this is all the answer as well.
I think that there are companies that base themselves in the Republic of Ireland because corporation tax is lower than the mainland UK. If the mainland UK lowered their corporation tax, they would base themselves here.
Possibly, but
I mean, that's a good question. And again, it comes back to the point about, it's very difficult to predict what's going to happen because there's other variables you need to consider. But let's say that is true, right? We're just competing on corporation tax rates, and arguably the Irish position is stronger because many of the pestle factors I described exist within Ireland. So in terms of looking at Ireland and the UK, they offer many of the same things in terms of culture, quality of living, natural beauty, all these kind of things, liberal people, etc. So in many ways, if you're an American company, Ireland is a great place, and also islands in Europe as well. So it actually trumps the UK in that regard as well. But I guess what you also have to consider is, what is the net impact on Ireland to the ordinary Irish person? Because if they are lowering corporation tax, I suspect that it's driving worker tax liabilities upwards. And I do actually know someone who lives out there, but I just know anecdotally as well, that income tax, capital gains tax, they are higher than they are in the UK. Allowances tend to be more restrictive compared to the UK. And in my mind, it's just a way of offsetting the fact that they've lowered the corporation tax rate. So the idea being that you brought in a business, they're going to create more Irish jobs, and enable more Irish people to, if they can, buy a house and have the lifestyle they want. But actually, what you're finding is that many Irish people are getting priced out of areas they would actually like to live, and the jobs that are being created are not paying enough um, to allow them to live where they want to live, because it's just creating a lot of demand actually where there isn't sufficient supply, and people having to live further and further away. And I also suspect a lot of these jobs that are being created are not necessarily always going to Irish citizens. So as I mentioned before, if there's jobs at a junior level, companies like this are going to be thinking about AI and automating them and not employing anybody. Or they're going to be looking at places like India or China, where again you have a highly skilled workforce that can be doing sort of non-client facing work, for example, back office work, very capably, um, but at a much lower cost. So for me, there's always pros and cons with lowering corporation tax. Um, and it's not just a case of, okay, if you lower corporation tax, that's automatically a good thing, because you have to pay for it somehow. Um, as I say, and I think the unfortunate thing for many Irish people, many young Irish people especially, is that it probably will make them consider, well, I can't earn enough to compete with other people earning here, and therefore get a place where I want to get a place, for example. So maybe I should just work elsewhere, and work remotely, for example, become a digital nomad, save up some money, and maybe come back. Maybe I won't, right? So I think for me, these things do need to be considered when trying to sell the dream of low corporation tax.
But I also think that it's actually fair to say, well, hang on a minute, and I mentioned it earlier, how come a company that is in the UK, where the customer is buying that product, it is being sent around the UK, can pretend that they are based in Ireland or Liechtenstein or Lithuania or whatever? That's not right.
It's not right.
Again, I find that position from the presenter odd, considering what we're talking about. And I think Daniel Priestley just chimed in there before I paused it to say, yeah, that isn't right. But from a legal perspective, a corporate is just as much a citizen as an individual. So if an individual can just leave because they don't like the tax regime where they are, and pretend they are located or headquartered somewhere else, and their business is somewhere else, even though the customers have not moved, right? Because this is the other thing that is missed in this conversation: the agency of your customer base, right? Your customers can choose to go elsewhere, and if you're a small business, chances are you have competitors, um, unless you have genuinely forged your own name, right? But chances are you have competitors, who may not be making those decisions to relocate for tax reasons. So more sort of B Corp, corporate social responsibility type minded organizations might say, you know what, if you're relocating elsewhere and taking those jobs elsewhere, we actually want to do businesses with companies that are more local to us, right? So if it's a US company, a US customer, they might want to just do business with a supplier that basically operates out of the US, for example. So there is that risk a company takes when it just decides, you know what, to upstick and leave. But my feeling is, if an individual is free to do this, or is threatening in some ways to do this, if tax becomes too high, then why is it worse for a corporate to do this? Because corporates also create jobs, right? They also grow the economy. All the things that a high net worth individual does, corporate citizens, for want of a better word, businesses like Facebook also do. They also do the same thing. They can make the exact same arguments around tax and why tax burden shouldn't be too high on them, irrespective of where they operate. So I do find this position a bit weird, being honest, because I personally don't see a distinction between someone like him and Facebook. And also, Facebook has beneficiary owners. So again, should we not worry about the owners of Facebook, only Facebook itself?
Yeah,
it
you would
sucks.
agree with that.
Of course I do. It really sucks. It's not. I wish there was an easy answer to that, but there's three problems with this. You can either tax revenue when a sale is made, and that's called a consumption tax, and it tends to get passed on to the
It's on the
consumer.
consumer, yeah.
Or you can tax profit, and it's very, very difficult for a geographically limited country to tax a digital product, because if I'm leasing my database of Luxembourg, if I'm creating my brand assets in the Virgin Islands and then renting them back, right? Now, you can say, oh, we ban that. I hate to say it, but that's global trade at the moment. You'd literally be moving in the direction of North Korea because the rest of the world is digital, right?
But if the
Okay, so he said he was going to raise 3 issues, but he only actually raised 2. So he talks about consumption tax, revenue tax. And again, I think for me, there's a deliberate, if I'm being honest, conflation of what we're talking about. So a revenue tax, he's correct when he says a revenue tax will typically be passed on to the consumer, but any cost of any kind, any corporation tax will be ultimately passed on to the consumer if that business is going to be profitable, right? So that's the first thing. And also, it's something that the government can just make a business do if it chooses to do it, right? So it is a workable solution, but it's not really actually what we're talking about when we talk about a wealth tax, because taxing revenue is the same as taxing income. And the wealth tax is being positioned as an alternative to taxing income, right? So you're only considering revenue as a way of determining the valuation of the business, coming back to what he said earlier about, okay, how do you value a business which I haven't sold yet? And one thing you can consider in determining its the asset base, the tax base, is, okay, how much revenue have they made? How much revenue does this asset give to the asset owner, right? So that's the first thing to understand. Secondly, that revenue can be attributed to where it comes from, right? And again, even if it's difficult, even if it's a digital service, which can be tricky, right? You just make the problem the business's problem. And there is a risk in doing that, because it can tip a business to say, okay, you know what? I don't want to take on that burden. I'm going to operate in a different jurisdiction. That is the kind of thing that would, in my opinion, make a decision. Then, you know what, these rules are too complex. There's too much risk. I want to avoid that risk. I'm going somewhere else. But if that business still wants to participate, let's say in the UK market, and the UK market said, well, look, this is what you need to do. So if we think about VAT rules, for example, then that business, if it wants to access the UK market, will have no choice, right? So again, it works in both ways. Yes, it doesn't help the country, but it doesn't help the business, because it just closes off that market potentially. So again, these are things that are just ignored, because he makes it sound as though all the cards are on the business's side or the entrepreneur's side. And actually, it's a mutually beneficial relationship. So therefore, they also have something to lose if they play hardball. So that's really important to consider. The other point around taxing profits and manipulation of profits is actually what he's describing here. Firstly, it's not allowed, and that is not a North Korean dictatorship type position. That is basically transfer pricing, right? And that's what transfer pricing rules, when you think about groups, address. So it's not something that is actually allowed. And secondly, we do tax profits. You work out your taxable profit or loss, and it's treated accordingly, right? And you get relief if it's a loss, or if it's a gain, you have a charge, right? So again, I don't see a problem there, because it's something that actually already exists. So I think the key point I'm making here is we're not talking about necessarily taxing revenue directly. When we think about revenue, it's more around what is the value of the asset that the revenue is attributable to. We can tax profits if we want to. We can tax revenue if we want to. But actually what we're talking about is working out a tax valuation of an asset or a business to work out the tax amount or the tax rate, I suppose, on the asset itself. That's actually what we're talking about.
main economic powerhouses in the West all agreed the boundaries of their geography, as it were. Maybe there's an agreement that can be done on whose geography you're going to be taxed in.
I agree.
So I think that's a fair point, and it comes back to what I was saying about there could be difficulty here around who is owed the tax, and it will be an environment where jurisdictions are going to be arguing it's them. I suspect certainly where you have an American tech company, America is going to be arguing the majority of that should be coming their way. So I think there is going to be a global challenge around how you deal with this. But ultimately, I think for me, the simplest way I would think about this is, where is the beneficiary owner located? To me, that seems to be the easiest way of figuring it out, right? So the first thing would be, okay, well, if that person is domiciled or resident, let's say in the UK, that would suggest some of the asset tax should be paid in the UK, right? But if that business is deemed to be a global business because the majority of the consumers come from America, then one could argue that actually a proportion of that should go to the American jurisdiction, right? So whatever tax is calculated, some of it should just go over there. But the default position is actually it's where the individual is located. So there are ways around it, but it would require global cooperation just to avoid like disputes, essentially. But I think it's possible. But I do accept that is a fair point.
Definitely, it needs thinking, and it's fundamentally not right that Facebook. One thing that really annoys me is things like Facebook pretends to be an island while selling British products to British consumers with British ads.
I don't know why he's annoyed by this, considering his position around, the mobility of entrepreneurs, right? Because, as I say, if he has a business that's in the UK, it doesn't mean his consumers are in the UK. If it's a global business, it doesn't mean his workforce is in the UK. Without knowing more details, it just means decision making happens in the UK. That's literally what it means. It just means head office is there. And that's no different to what Facebook is doing, right? Their head office, let's say their European head office, I don't know, is in Dublin. They are an Irish company by definition. Like, how else do we decide what company they are, right? We know it's an American company, obviously. We know that's its home. That's where the founders are from. But from a legal perspective, like, I can leave the country and apply for citizenship somewhere else. I mean, the companies can do the same thing in a way, I guess, and so can he. So I don't see why he in particular has a problem with this, as opposed to the callers, for example. I can understand why the callers might have a problem, but I'm not sure why he has a problem.
But what really annoys me is that at the same time that the government has put an enormous amount of thought into how to tax people for using Facebook Marketplace and for selling a few trinkets on eBay, they've thought about how do we tax British citizens for being a little bit entrepreneurial, and they're not playing the game of saying, let's sit down and try and figure out how we actually tax Facebook and eBay and Amazon more. Because the truth...
I do agree with him that the focus is in the wrong place from the government. They as I say, they want to tax income, and they want to go after sole traders, small business, because they're easier to get hold of, right, as far as the government's concerned. So in that sense, it's understandable. But I don't understand why he thinks taxing Facebook more is any different from taxing a high net worth individual more in terms of the risks, right? So if the risk is that, well, if you try and tax a high net worth individual more, they're going to leave. If you try and tax Facebook more, they can leave even easier, right? It's even easier for them to say, you know what, F this, I'm out of it, right? So I'm not sure why that is better than the alternative. And actually, me personally, I'm not actually interested in taxing Facebook more. I'm actually interested in taxing the owners of Facebook more. Like, that's who I would be interested to see. What is their tax contribution, and how does that compare to the people they employ? And if there's a big discrepancy, how do we address that? Because a business is just a vehicle of building wealth, right? It's an asset in itself, but it just enables an individual or a group of individuals to incentivize a transfer of resource or assets from one place to another, from a larger population to a smaller population. So that smaller population becomes wealthier relative to the larger population. So the business is kind of a red herring, in my view, actually. It's more around what impact is that business having in terms of job creation, and therefore the overall happiness of people of where it's located. What is the benevolent impact of the business? And how much tax is the owner of the business paying relative to everybody else? Those are the questions I think that are important to me personally.
Is these corporations are now bigger than governments. These corporations are now more powerful and have more geographical influence than governments.
Well, and the great example of that, it's only a little example of that, but the great example of that is that this country and others have ambassadors to Silicon Valley. We are sending diplomats to the place where they're building these tech companies, such is their power.
All of the government, their job, their secret goal, if you work in government, is that you'll leave government, you'll get a job at Facebook. Right?
I do agree with him there. My feeling is that there isn't political appetite. There isn't a political appetite to address the situation from a tax perspective, because I think a lot of politicians want to ensure that when they leave government, they themselves can take advantage of these tax arrangements and the tax legislation that exists currently. And also they're very closely connected with these corporates, and therefore the corporates have the ears of government and policymakers to make sure the status quo stays as it is. So it's definitely a right thing to point out, in my opinion. There's definitely a conflict there, in my view, which creates barriers to the tax reform that's being proposed here, in my view.
We've seen some high-profile examples of that.
Nick Clegg left. From one to another, Nick's in Mayfair. Hi, Nick.
Afternoon. Question for the panel. Do you think the government spends our money effectively?
Well,
so that's a leading question, and I think we know the answer based on what Daniel Priestley has said already. But I think for me, where I do lean towards Daniel Priestley, actually, despite what I've said so far, is the government does need to be more efficient. I think anecdotally, most people would accept that. I don't think it's the silver bullet that solves the problem. That's where I disagree with Daniel. However, I think the sentiment I get from him is that he just doesn't trust government. And I think many people just don't trust government to spend money wisely, to manage the finances, right? And therefore, raising taxes to people that are helping solve the problem of economic stagnation is like a kind of slap in the face, if that makes sense. So he's part of this community that's growing the economy, creating opportunities, creating jobs, which is all true, which is very much needed. But you're basically making us pay for government incompetence, right? I think that's the way he sees things in his mind, and I can kind of understand why he sees that. So in that context, I do agree with where he's coming from. I don't think the government can basically tax high net worth individuals without considering and looking at themselves and saying, okay, how do we become more efficient? And actually, if all they're going to do is tax high net worth individuals, are they incentivized, or can they be trusted to also do the necessary things to make themselves more efficient? And potentially there is no incentive to do so if they're collecting a lot of money from very wealthy individuals. So I can see it from that angle as to why many very wealthy very high net worth individuals are not feeling like they want to contribute more. But what I'd equally say is that position could be true of anybody, even if they're earning through the salaried arrangement. You're paying a salary. You don't have any choice but to pay the tax rates that are being charged, but you equally may lack that faith as well. So we're all potentially dissatisfied So therefore, is it fair that for high net worth individuals, it becomes a bit more discretionary how much they want to contribute under the current regime? So yeah, it's a difficult one to sort of fully reconcile. But I can kind of in some ways see where people like Daniel Priestley are coming from in that regard.
All I know is that they used to spend 700 billion a year not that long ago. Now they spend 1.3 trillion a year. They've almost doubled the budget, but I haven't seen double the services. I haven't seen twice as many police officers on the streets. I know that we have something like...
And he's right. We haven't seen an improvement in service, but we also have a lot more debt. And again, he keeps ignoring debt. Like that doesn't form part of this equation here, right? The reality is the government just needs more money to pay in some, like, part of that is because there's more debt to be repaid. So unfortunately, there can't necessarily be an expectation of an improvement in service, because that is not the biggest issue right now. The biggest issue right now is what he says, which is a lack of growth, and the fact the government is heavily in a heavy deficit. And from a societal point of view, the fact that work isn't truly incentivized, in my opinion, when there's no guarantee you're going to be able to actually earn enough to get to work, have home security, and even retire. So, yeah, I think for me, that is ultimately the issue here.
More administrators working on any given day in a hospital than we have nurses and doctors. I know that the British Empire took over the entire world with less than 500,000 people working in civil servants, but now we have 6 million people working to run one little island. So, take a look at Samsung. Samsung only has 250,000 people and is a global business. I can point to multiple massive global companies that run with 200,000 to 300,000 people that are doing bigger, more effective things than our government. Our government's got 6.
What does he think that a government? What does he think that a company does that is more impactful or bigger than what a government does? Right? I don't, because firstly, a country isn't a company, right? A country is is something that's completely different, and ultimately, I don't think it should necessarily be run as a company. Like, I think you want to take best practice from the private sector and say, okay, when we think about being lean, when we think about being agile, when we think about being smart, removing unnecessary bureaucracy, I think, innovation, I think that's what you want to adopt. But ultimately, you're not running a government necessarily to generate a profit. And ultimately, if you are running a government to generate a profit, if you're running it as a business, you're probably incentivized to increase taxes, right? Increase your margin relative to your outgoings, your day-to-day spend, right? You're going to probably live in a high tax economy if the government is only interested in creating the biggest surplus possible. And in that environment, all you're going to do is raise tax, pay for as little as you can get away with paying, and then you're just sitting on a massive surplus, which you then distribute to, I don't know, I guess politicians, right? I don't know why he's making this comparison to a business, because to me, it's not an appropriate comparison, because businesses do different things to government. Governments are benevolent in nature. It's around, as I say, creating an environment to encourage business, to encourage individuals to fulfill their potential, to look after the natural environment, to protect our borders, to keep us safe, defend us from wars. The business's sole objective primarily is not necessarily benevolent, it's not necessarily bad either, but what a business is intended to do is enrich a smaller group of individuals. That's what it's intended to do. And that's not a controversial thing to say. It's not a bad thing. It just is what businesses do. So I don't think I'd apply that model to running a country.
Million people working in government. Do we need 6 million people? Do we need all those administrators, people dotting I's and crossing T's when AI can do?
maybe you do. Like I mean, we probably don't, and I'll probably accept his position. But again, he's just saying 6 million is inappropriate because previously it wasn't 6 million, right? But maybe you do need 6 million, right? We don't actually know. And I think what he's actually saying is that the government should be challenging themselves. And if that's what he is saying, then I do agree with him, right? But simply saying a number is bad because it's bigger than another number in the past, I don't think you can read too much into that without qualification, without context. And I think when you're making these points, I think he needs to do a better job in that regard, I think.
Most PMG, you're on 600 to 700,000 a year. If you work at Ernst & Young, you're at 700,000 a year. Why would someone leave being a partner at KPMG running a team of 50 or 60 people? Why would they leave 700 grand a year with a pretty easy job to run the country for 140,000 a year? I can't.
So again, when he talks about, and I've heard this argument before, because it kind of implies two things, that government is not qualified or incompetent, and or it's underpaid to attract the right kind of people to run government, i.e. people from the private sector. Now, I think for me, I find it interesting that people take that position because there isn't really a conflict between the two if you're thinking about earnings, right? Because as he's mentioned before, you can't replicate the prestige of being a front bench politician. You can't replicate that in terms of, okay, you're the prime minister or you're the chancellor, you're the foreign minister, the home secretary. You can't replicate that through anything you do in the private sector, actually. And the reality is, if you end up in these types of roles, the private sector is open to you once you've retired, as he rightly said. So there isn't a conflict in the mind of someone who works in these places. There isn't you either do this, you either do that. And also the salary that these politicians receive is also supplemented by a very generous expense arrangement, a very generous final salary pension. Certainly, if you're the prime minister, guaranteed. You often get use of a second home, so you can use your primary home as a way of monetizing or generating income. So there's a lot of things you can do as a politician, which you can't actually necessarily do as a very high net worth private individual, let's say, or private citizen. So again, I don't see why he's positioning this as, there isn't a willingness of the right people to do these jobs. Because I can assure you, if you want to be prime minister, these are the same kinds of people that want to be running hedge funds and banks and consultancies and things like that. They're the same people, and they're going to have the same opportunities in the end. So I don't think the issue is the pay, and I don't even necessarily think the issue is competence per se. I just don't think politicians are incentivized, in a sense, to do the right things. They're incentivized to do the easy thing, just so as basically not to mess things up. I think that's actually the issue.
See what they're spending it on. I'm in the exact same camp as that. I don't know what you would cut because I don't see police officers and I don't see enough doctors and nurses. I don't see it.
And I think that's another thing to consider here. He's mentioned before he thinks the government is too big and it should be cut and it should be closed. It should be smaller. Then he's now just said he doesn't know where the money's going, and that comes back to what I was saying about borrowing, for example, and how much of it is going to dealing with the borrowing. If you don't really know where the money's going, I'm not sure how confident you can be that cutting is the answer or it's the silver bullet, right? So I'm not disagreeing with him that we should be looking or considering cuts as well, but I wouldn't say it with my chest because, like him, I don't necessarily know exactly where all the money is going, but all that tells me is that, well, okay, maybe I should remain open to discussion about what is happening. I wouldn't necessarily say you must cut the state, and I wouldn't necessarily even say the only answer is increasing taxes or introducing a new tax. My position is relatively on the fence. Actually, it's relatively neutral. It's, well, I think you kind of need to do a bit of both. Is my position, and I think that's a reasonable starting point before becoming more informed on different things. So it's not that you have to know everything, but I think you kind of just have to consider what you don't know sometimes when adopting a position.
Being spent, where does it go? Where does 1.3, where does 45% of our economy go? Like, I have no idea. There's potholes in the streets. Where is this money being spent? And it blows my mind. I know that Ed Miliband runs around, playing ukuleles to beautiful green farms that he's going to cover in solar panels, right? So there's obviously money going in there, but where does this go? It's craziness.
Well, there's a lot that needs to be, I think procurement, in particular defence procurement, needs massively looking at again, because that just seems to be completely overblown. Glenn's in, is it Storrington, Glenn, in West Sussex?
Yes, good afternoon. Storrington, West Sussex.
Wonderful.
Good afternoon. A question for Daniel. In your opinion, is our dire economic performance as a consequence of having a government that is pretty much replete with people with no entrepreneurial experience, people that have really lived their lives and their careers, have been in the public sector, spending money, not creating wealth?
Well, I can tell you, if you're a business owner or an entrepreneur, you are in a full contact sport with reality at all times. You cannot be dodging reality. If you spend money.
So I kind of see where he's coming from, because I think I do accept that, because the implication is that the government is not in touch with reality. And I think it is a position I do share. I feel like the government, yeah, they are out of touch. However, I don't accept that a business owner knows, like, there's things governments that do that a business owner cannot do, or businesses cannot do, or shouldn't be doing, in my opinion, and are just not going to be aware of. So an obvious example is matters of national security, right? So yes, you could privatize that, and obviously, you think of America, there's some elements that are privatized, but it leads to perverse outcomes when you do that kind of thing. And arguably, you want the government to at least oversee it or be doing it, for example. So there's a lot of things that the government does that businesses can't do, just by virtue of the fact that they are a government and the business is a business. And I think they need to work hand in hand. This idea that we should be treating governments as sort of businesses in their own right and running them in this way, I think it's a flawed ideology. I think the nature of government is as it should be. The nature of business is as it should be. And ideally, they should be working collaboratively, right? And they should be learning from each other in terms of what is best practice, i.e., from a business perspective, it's okay, how do you operate efficiently? How are you agile? How do you adopt best practice? Whilst from a business perspective, it's more around what we call corporate social responsibility side, the benevolent elements of business. How do we get more people working? What is our role as business owners in that regard? How do we ensure that we have a low carbon footprint? That's where you work with government and regulators as a business to address these things, rather than doing your own thing and in each business sort of reinventing the wheel, so to speak, in that regard. So I think there's a place for both government and business. I don't see one as being more important or better than the other, if they work properly.
It doesn't work, you know about it. If you waste money, you know about it. It hurts you personally, it hurts your team, it hurts your budget, it hurts your ability to grow. It really does damage to you that month. And it's a horrible thing if you're in business. You have to face up to reality at all times. When people have worked in the public, in the government sector, they don't have to have that same accountability to reality. If they don't spend their budget, then they lose it the following year. So they're incentivized to spend more. If they do something where they do a bad hire, it's easier to just ignore the fact that they've done a bad hire than to actually address the fact that they've done a bad hire. So they just hire someone new on top of the person that didn't work out. So there's all.
So I do agree with him there, just based on my own anecdotal experience. And this is probably why he looks at the increase from whatever it was to 6 million workers in the government, I think is what he said. To conclude that is probably because the government is more inefficient. Because when you start building in these legacy issues that he's describing, that is what happens. And certainly in the UK, it is something I've observed just in my own small experience in the workplace. But what I would say is that you can see this in the private sector as well. So I've worked in both the private sector and public sector, and it's present in both. However, what I would say with the private sector, and I do agree with him, is that there is more of a pressure through the fact that we want to see a return on investment and higher profitability to basically remove the dead wood, so to speak, in one way or another. However, what that may often involve is a sort of one-off cost in terms of restructuring, severance, etc., consultancy, for example, which governments don't necessarily have the luxury of doing. And when they have tried to do it, they do it very badly. Coming back to his point about government learning from business, so it is a problem that exists in the private sector. However, there's more of a feedback loop through just investor pressure and commercial pressures to deal with it a bit more quickly, and actually deal with it. Whilst in the government sector, it can be easier, as he says, to actually leave it and paper over the cracks. So I do accept what he's saying, and generally on this point.
All of those things that don't work. It does help to have people who are entrepreneurial.
But why is this, Glenn? Thank you. It's a good point, but it does seem to be at this moment in our collective history, it does seem to be a particularly European problem. This doesn't seem to be the same problem in Singapore or Malaysia or China, particularly, although it's a very different system. Japan. This doesn't seem to be the same issue of a sclerotic state with people who don't really know what they're doing.
All of those places have embraced economic freedom, and they've said, hey, we do not want to be a nanny state. We want to let people get on with their lives mostly. We want to run a pretty lean government. By the way, I'm not anti-tax. Most of these governments are about 30 to 35% of the economy. So that seems to be a pretty good, efficient way to run things.
Yeah, so I mentioned this before. Why is 35% efficient? And what I mean by this is, just because a country has a smaller government as a proportion of GDP doesn't mean that government is efficient. It just means it's smaller relative to its GDP. But it might just be the fact that the GDP number is higher. So you could argue it's a more effective government because it has a higher GDP. But how do we know? Is basically what I'm asking. Like, we can speculate on that point, but we don't actually know why this is. So I think for me, again, it kind of feels like a bit of a red herring. It kind of suits his argument, but the number on its own, to me personally, doesn't prove anything. It doesn't debunk anything, and it doesn't prove anything. It's just, okay, well, their number is smaller, but are they more efficient? I don't know, right? I don't know if they're more efficient.
30 to 30, about a third of the economy is government and 2/3 is business, and that seems to be about the most efficient way to do things. We do not want to be a nanny state. We want to let people get on with their lives mostly. We want to run a pretty lean government. By the way, I'm not anti-tax. Most of these governments are about 30 to 35% of the economy. So that seems to be a pretty good, efficient way to run things. 30 to 30, about a third of the economy is government and 2/3 is business, and that seems to be about the most efficient way to do things. The other big issue is that the UK has no vision for what we are. We used to be the head office of Europe when we were inside the EU. We're now drifting towards being the fifth Nordic state, and we're becoming, Scandinavia 2.0. Do we want that? Is that what we want as a country? Do we want to be one of those socialist kind of leaning countries? Or do we want to be Entrepreneur Island, where we are a growth-focused country, we're attracting businesses, people are moving from Dubai to here?
Okay, so he's mentioned socialist versus Entrepreneur Island, right? I don't know why socialism necessarily is mutually exclusive from entrepreneurialism. Like, So again, maybe that's some learning I got to do on my side, but I don't actually see a conflict between the two things. Because if I think about the UK, for example, it views itself as an entrepreneurial island, but there is a welfare state. There is an element of socialism that underpins like why we go into business, right? When you think about a lot of businesses' mission statements and the purported impacts they want to have, they won't tell you, "Oh, we just want to make loads of money," right? That's not typically what they say. Typically, they talk about wanting to add value, empower their customers. They tell you a story, right? The best companies tell you a story, and they're normally benevolent in nature. So where does that come from? If it isn't social, if we're not socialist leaning in some ways, right? So I find it odd that he talks about socialism like somehow it creates a conflict with, I guess, capitalism, I suppose. And if capitalism, if you take it in its pure form, yes, it isn't socialist, but I don't think that is how capitalism is actually operated in most Western economies. I know some people would like to see it that way, but I think most people accept that it does create problems if you take a fully capitalist mindset with pretty much everything.
Denmark seems to be a perfectly well-functioning state. It's got very limited and low childcare costs. Friends of ours were looking at moving to Denmark, where the tax rate for the work that they do is actually lower than it is here, and the services are fantastic. So maybe there's some
people would love to be a Nordic country. That's great, but you are going to have high taxes, and you are going to have people leaving. The Nordic countries do have all of their millionaires, a lot of their millionaires leave, they lose money. They're very lucky in Norway that they've got the big wealth fund.
Yep.
But
yeah, so again, he says, yeah, you can be Norway or the Scandic regions or a Nordic country, but you've got high taxes. And again, it depends who you are, but I don't think there's a problem with that if you see the upside of it, right? And I think that's what we see in places like Germany as well, where, people understand and can see the benefit of higher taxes. And also, if they feel the tax is being applied fairly, then whether the tax is low or high becomes less relevant if it's being applied fairly. So if everybody is paying high taxes, you might, as a matter of principle, not agree with that. But it's easier to swallow if everybody, no cap, but so no diddy, but it's easier to swallow or deal with if you feel like everybody else has the same burden and you're also seeing a well-run state that's in a deficit ideally, which is what he's describing with Norway. But if you're seeing the worst of both worlds, which is basically what I think he is observing, that resonates with me, I can empathize with that. You're seeing a scenario where no matter how much money you give the government, they seem to squander it. They seem to just, it seems to, just be pissed up the wind. And there's this massive growing deficit. And then your answer is, we're coming after you, the ones that are growing the economy. I can kind of start seeing for those individuals the problem, right? But it doesn't change the fact that we do need to address this. It doesn't change the fact that if you are somebody with a lot of assets, then there is an argument to say, well, if the tax regime is to be considered fairer, do we need to look at taxing those assets in some way? So it doesn't really change that much in terms of what the solution might have to be to address this, as well as he rightly says, looking at how you can reduce the size of the state if it's deemed to be oversized and inefficient.
But they are having this problem. The problem is that we live in a digital world where people can live and work from anywhere. There's never been more freedom if you're doing well.
If you're doing well, I don't think there's more freedom. I think there's the same amount of freedom that always existed. We can all think of people that do well and are able to relocate if they want to relocate, set up businesses, to open up new markets for all sorts of reasons, all right? And also, if you're thinking about a business, they as I mentioned before, they can headquarter wherever they want to headquarter. So I don't think the fact that because the economy is more digital, or assets are more intangible, let's say there's lots more intangible assets on the balance sheet, if they are recognized there, means that suddenly there's a bigger risk of people, there's a bigger flight risk. I think the flight risk has always existed. It's always been there. And I think the people that want to leave for tax reasons, I think the majority of them have probably already left. And I think the new wave of people that may leave because of tax are actually salaried workers, not people with lots of assets, which is actually the thing we're looking to tax. The people with assets, introducing a tax on those assets, in my mind, doesn't dramatically increase the flight risk, depending on how you apply that tax.
Here's Paul in Yorkshire. Tom, your multimillionaire guest has clearly confirmed the reason why he and his fellow plutocrats should pay the same level of taxes to other workers. Greed before humanity.
I would love.
So as I mentioned before, I don't think we can accuse anyone of being greedy, or more greedy, or prioritizing greed over humanity. We don't know. So therefore, we just have to take on face value that they're not greedy. They're just trying to do the same things everybody else is trying to do, in terms of getting ahead. So I think for me, if we start adopting this adversarial approach between ourselves, I think it does more harm than good, personally.
Have to pay the same level of taxes as other workers. We like you.
Why don't you?
Of course,
So he's sort of suggesting he pays more, and he does pay more. But again, I think what he's saying is disingenuous, because it's back to the 1% pay the 10% and the 10% pay the 40% of tax receipts. It's back to that argument, and I think we've already explained why, in the context of what we're describing, it's not a valid argument. And the fact that he pays more is what I think he's doing, is he's conflating income tax and the proportion of tax he pays on his income versus the proportion of tax he pays on his wealth, which he keeps disputing, right? He keeps disputing his wealth level when it suits him. So therefore, that is why he's saying, okay, I pay a lot more. Because if you consider his income, it's possible he is paying a lot more. If he's taking income over and above the allowances, chances are he doesn't actually need to do so. But if he is, then as a proportion of his income, he probably is paying around the same, if not more. But as a proportion of his wealth, including any unrealized gains he's describing, which he can monetize in different ways, he's paying a lot less relative to somebody else whose majority of their income represents their wealth in a sense, where they have a smaller asset base. So to me, that's the bit that's deliberately, I think he's being disingenuous on, and he's being deliberately misleading when he says, oh, I wish I was paying as much as them, but actually I'm paying more. It's like, well, that's not the point. The point is that as a proportion of your wealth, you're paying a lot less. The tax burden on you is a lot less than somebody with a lot less wealth.
I pay way more than that. I pay ridiculous amounts of money.
As a proportion of your earnings, you are going to pay a huge amount more, but as a percentage.
And again, unfortunately, the presenter's fallen into the trap. He's talking about earnings, and the tax is not on earnings per se, it's on wealth. It's on the asset value, right? And it may consider earnings attributable or cash inflows attributable to the asset, but we're not specifically talking about earnings or unrealized gains, actually. So that we do need to be clear on that. So it may be decided that actually we do want to tax earnings, but that's defining wealth as earnings. But if I'm defining wealth as assets, so for me, in my mind, we're not talking about earnings. So unfortunately, again, it feels like a lot of things are being conflated. And it's a shame, really, because it makes it harder for people to adopt a view, right? Because I'm not saying taxing wealth is necessarily the absolute right thing to do. I'm just saying I personally see validity in the discussion. And I think it's a reasonable position to take as a way of making tax fairer. Now, if someone can propose an alternative that is fairer, then or debunks what is being proposed, then I'm all ears. I'm here to hear it, right? But what I'm equally saying is that I don't think taxing income more, whether that be capital gains income, inheritance income, unrealized gains, or salaried income more, is sustainable. I think you have to consider also the asset base itself.
Total lie. This is totally made up. If, as a proportion of wealth, if you create this fictitious number of wealth and you say, oh, Daniel's wealth went up by this
How
amount.
much are your businesses worth?
Again, it's not fictitious, and wealth goes up and down. I've said this before. So if the value of assets go down, the tax will also go down. So I wish he would stop standing on that hill. It's not fictitious. It's not weird. It's not strange. It's well understood how to value a business in many different ways. So there's no problem there.
Quite a bit, tens of millions, right? So we're a business that I've got a multiple group of companies, and we do. We're successful and we're fast growing, and investors
so let's
value
say
us as a lot of
15
money.
years time, you
and note what he said. Investors have valued us at a lot of money. So does he accept that valuation? I wonder, or does he believe that valuation is fictitious? Because it'd be interesting to know specifically what his opinion is of his investors' valuation. So, as I say, I think he's almost debunked himself when he talks about the problems of valuing a business, and the fact that it could be considered fictitious.
You want to, quit the day job and go and live on a yacht somewhere. You sell.
If I sell my companies today, I'm going to pay capital gains tax on the sale, right? I'm also going to pay
of what percent? 20 odd.
Well, I'll have paid company tax all the way along, right? So all the way along, I'm going to be paying 20 to 25% corporation tax, and then when I give that money to myself, if I pay myself, I'm then going to pay my rate of tax. So I'll have paid 25% at the company level, then I'll have paid 45% at my personal level, then I'll pay 20% when I spend it, then I'll pay 40% when I die.
But you'd be a squillionaire.
Well, look.
So what? So you pay a.
Okay, so he talks about the tax burden for him. Now, the first thing to note, the first thing I would note is that if he's genuinely going to pay all of that, then he needs, new accountants and a new financial advisor, because there's no reason he would have to. But secondly, even if he did, it's just the same as everybody else. So I don't know why, again, it's a problem, because everybody else is subject to the same rates he's describing, right? So he is liable to tax on the basis he's said, but whether he actually pays it depends on a number of different things and a number of different reliefs he might be able to apply. Now, and it also depends how he receives, or how he is paid, for example. So let's assume there is no tax reliefs for him, right? There's no way for him to avoid any of the things he said, which again, there are, but let's assume there isn't. Why is this a problem if it's the same for everybody else? It would be my question. Yeah.
A little bit more, and then everyone else can be happy too.
I get it, and I do pay it, but I'm just saying this whole idea that I don't pay the same as workers is nonsense. I pay.
I don't think people necessarily think he doesn't pay the same as workers. I think people think that he is paying a lot less as a proportion of his wealth. I think that's what we're saying here. And I think he's deliberately missing that point, because And the reason I'm saying this is because he has a number of different ways of drawing an income from his business, right? So if you have a business and you are very, very wealthy, so you have a lot of assets, you can borrow against those assets, for one. You can pay yourself a small salary that remains under the tax allowance. And if your partner is a director as well, a married partner, they can also draw. So that doubles the household tax-free income. You can take a small dividend that remains available. You can take advantage of any capital gains allowance to a point as well. So you can quite quickly get to about 40, 50K very easy without paying any tax whatsoever. You can draw a pension, so you can have a director's pension, which again is tax allowable. There's just all sorts of things you can do which allow you to draw a modest income. And again, it's not crazy numbers, but at least a very modest income whilst avoiding tax. So, and this is what a normal worker cannot do. They can't utilize different income buckets as easily, and therefore more of their income is being exposed to tax, right? So that is the fundamental difference between somebody like him versus somebody who's a worker, right? It's just by function of how he is paid. And again, it is what it is, right? It's not necessarily a good or a bad thing. It just is what it is. That he can take advantage of more tax reliefs and more allowances compared to the ordinary worker who is only earning through a salary. So therefore, yes, he's exposed to the same things, but he can mitigate the tax far more easily by adopting different strategies compared to somebody else.
This idea, I don't know who's popularized this idea that wealthy people aren't paying their fair share of tax. 1% of people are paying.
So obviously he's referring to Gary Stevenson here, but it's not an idea, it's a fact, right? It is a fact that relative to those that are less wealthy, they pay less tax. Like it's I wouldn't necessarily say the word they're not paying their fair share because they're following the rules, but they're just paying less tax, right? And do we think it's fair? That's just an opinion, right? But there is no issue with saying those that are very, very wealthy are able to reduce their tax bill to the extent that what they pay is far less as a proportion of their wealth compared to, let's say, ordinary people.
30% of the bill, 10% of people are paying 60% of the bill. Back in the post-war era, you paid 35% tax on your first pound, right? Every pound you made 35%. The average person, if you weren't in today's money, if you weren't $5,000, $10,000, you paid 35% taxes. Taxes were spread very equally. Today we don't have that. The taxes are on the rich already.
Final thought from me before I have to let you go.
Yeah, and I think again, the idea that the taxes are on the rich already, I disagree. The taxes are on the highest earning salaried workers, who I personally would not consider rich, right? And again, that's just a personal opinion. So if he views them as rich, then he's correct. But if he's talking about the onus being on people like himself, then I would disagree. The burden isn't, relatively speaking, on them. The burden is on the PAYE system. That is where the burden actually is, in my view.
But it'd be great to get you back at some stage because the reaction's been good. Why don't we go back to the style of taxation in the 70s? Millionaires didn't leave. They paid a great deal more.
Two things. If you want to go back to that system, then you have to do what that system did, which is 35% on everyone as a starting point on their very first.
You don't have to do that. Even if you choose an old system, you can modify it so it's fit for purpose for today's day and age. So you don't have to do that.
Pound earned, no free rate, right? Because that's actually how they set it up. They did have a 90% rate on today's money. You'd be talking about on amounts of greater than 2 million a year. So you'd be talking about 90% on anything over 2 million. Okay, that's a good headline number, but the thing that Gary Stevens is not telling you is that people paid 35% on their very first paycheck, on the very first amount. So do people want to pay 35% and have no tax-free allowance? Maybe, maybe not.
Yeah, so he's referring to Gary Stevenson there, and what he's not telling us. But again, it's a deliberate. I think it's a deliberate conflation. Gary Stevenson is not talking about a tax on income. So what he's describing is only applicable if you're taxing income of 2 million or whatever the number is he's saying, right? So because he referred to a paycheck. So if you're referring to a paycheck, I have to assume you're talking about income. Gary is not talking about a tax on income. I'm not talking about a tax on income. What we are talking about is a tax. What I'm talking about is a tax on wealth, right? And however you define wealth will impact your view. So obviously he has defined wealth earlier on as an unrealized gain, as a fictitious number. And on the face of it, that is problematic, right? You know, if you don't have a reliable way of measuring wealth, it does undermine the argument of taxing wealth. That it just does, right? You can't really do it. So he would be correct in that regard. However, I think what Gary Stevenson is actually talking about, and what I would interpret what he's saying, is he's talking about taxing assets. And the reason I make the connection is because I view wealth in terms of assets. I don't view wealth in terms of income. So that's why I don't have an issue with what Gary Stevenson is saying, for example. And if you are taxing assets and you believe assets is wealth, then it's not consistent with what Dan Priestley is saying. And therefore, why would Gary Stevenson be talking about the fact that there's no allowance when you talk about this scheme that they're talking about here? Like, why would Gary Stevenson be making this point around introducing an old income tax policy with no allowance? It's not relevant to his argument, and it's not relevant to my position. So again, I think, unfortunately, when you're not clear on what it is you're actually critiquing, it can lead to these kind of problems, which is why people just start misunderstanding each other.
The other question I would have is that in the 1970s, could you run any business from anywhere in the world? Could people get up and leave? Probably not. They had
So I disagree with him. You could run a business from anywhere in the world. It's just whether you would want to. And you can just get up and leave. Like, there was nothing stopping anybody doing these things in the 70s, in the same way there's nothing stopping anybody doing these things now. So I don't agree with him that you're more able to leave now. The people that are more able to leave now are actually the workers. It's not the business owners. The business owners were always free. The entrepreneurs were always free to do whatever they wanted to do within reason, provided they could get the finance to do so. The issue was actually the worker's ability to say, you know what, to their employer, I don't want to work here, I want to work somewhere else. That is the thing that's changed. And that is why I think there is a flight risk with respect to salaried workers. So for me, that's my position on this so far.
The game has changed.
The game has fundamentally changed. You can be anywhere in the world now.
Really?
Yes, workers can be anywhere in the world now. That's the thing that's fundamentally changed.
Good to speak to you. Thank you very much indeed for coming in.
It's been fun.
Daniel Priestley, businessman, entrepreneur.
Yeah, so that was an interesting discussion. I think there was a lot of validity in what Dan Priestley was saying there, in particular around accountability, government accountability. I think he is right to call out the government and say, look, the way I interpret his position is, I don't really have a lot of faith in you. You're too big. I don't know what you're doing, but you need to find a way of doing it with less money. I think that's a reasonable position to take, coming from where he's come from. And I can kind of understand why he feels in that context, why the answer isn't, well, look to people like me and people that are actively helping grow the country to pay more tax, because I don't have faith that you'll do the right thing with it. But what I'd also say in that regard is that, businesses need workers. They need good economic conditions. So therefore, there is a reliance on government and the workers of those countries, or whichever country they choose to employ workers, to be able to do a job for them. So for me, it's an equal and opposite exchange, and that should be reflected in whatever tax system we want to introduce, or what any tax reform we want to discuss. So that's ultimately the sentiment behind where my head's at on all of this. Anyway, I hope you found that useful, and take care.